Ladies and gentlemen of the crypto space, we're live on a Monday, October 21st at 11:30 a.m. So you thought Bitcoin was just going to break out and it was going to be up only and it was going to be easy. The structure of the chart looks great. Stop complaining about short-term price fluctuations. We obviously have the 10-year up, which is actually at a quite um, a point of interest interaction. I don't know. Let's go back to Bitcoin for 2 seconds, or let's look at it for 2 seconds. So you thought it was going to break out. Everyone was looking at it to see if it would get above that trend line. The hell's a trend line? Doesn't mean much to me. I'm much more interested in moving averages and certainly levels. And from a level standpoint, even the weekly close. No, the weekly close was a higher high. But this is a chop fest. It's not like it's a structural higher high. It's a higher high relative to the most previous higher high in July. All right, a quarter, couple months. Not too interesting from a higher high perspective. I would say at this point in time, my eye is on the 10, the daily 10, which is interesting because that's a relatively short time frame for me. What the captain usually looks at. The captain's not looking at 10 SMAs. But apparently, I am looking at a 10 SMA right now. And there anything? Nope, not on the monthly. This thing is so far in premium territory, which is what Bitcoin does. I mean, technically, from a monthly standpoint, we're above the 10 also. That's just downright fascinating because look at those closes. This bottom green line is pretty much monthly close back in 2021, as well as resistance expressed back in February of 24. And now the entire year of 2024 has been a resistance flip support because now you literally have support on top of it the entire year. That's an absolutely insane perspective to have. Let's go back to the daily. So we could look at the daily going forward, and my eyes certainly on the daily. I want to see if it holds this 10 on the daily. Notice what this is about to have, by the way. This is a golden cross on the daily, so that's a 10-100. All right, so a 10-200 is this fat green line and the red line. So 10-200, probably looking at October sometime. Still have another week in October. We could see a cross there. Um, we did have the previous bearish cross, the death cross, in August. 2 months. All right. From a daily perspective, that might be the 2024 moving average dip, so to speak. Structurally, I love the chart. Nothing to complain about whatsoever. It's the DXY going up, pushing into 104 territory, which is absolutely insane. If it breaches the 200 on the daily, let's see what's above. Not the 100 on the weekly. Okay. All right. That's constructive. Monthly time weighted average price and 10 SMA. Let's compress. 10 days left for the monthly close. October leading into November. That close tells you a fair bit of information. We want to see no wick through because guess what? You had months through back in September of 23, and then 1, 2, 3, 4, 5, 6 months through for a good part of 2024. Then a nice breakdown for 2 months, and that was a quick reversal. It was pretty much 100.09. I like the weekly perspective. I love this 200 SMA interaction, and I'd really like to see a weekly close below the 100 SMA. Are we going to get that? I don't think so. I wouldn't bet on it. We did get it last week, um, but this week doesn't look like the stream. I put them away. I put them on charge. Okay. So we don't see a resistance on the dollar from a weekly perspective, but we go over to 10-year bonds, which is holy shit, rallying from a yield perspective, which is basically the price of the bond is going down. People are selling, 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 driving up the yield, which is basically the spread of the market rate, market coupon versus face value on maturity, and that's how you get these types of interest rates. There's a relationship between the bond price and its intrinsic values and its face value and how you calculate the yield. Um, so look at that, right into the 50 on the weekly. Is a hell of a reversal from 3.6. Reminds you of what? That dollar reversal right into the 200 SMA. That's also on the weekly. If you're looking at the 10, we're nowhere near a moving average to the downside. For instance, the 200, we zoom out a little bit. I don't know. There's plenty of ways this could play out, and there's plenty of very contrarian ways. Maybe, and we'll look to social media on X. There's a post that gives us a little insight of how this time is quite different and weird. And obviously, that's not necessarily in terms of system fracture, system falling apart, systemic volatility. That's always on the table. But there's scenarios where, like, the dollar could be at an elevated price point, 10, 101, 102, 103, and yields could be at 4 and change%. And we could have a bull market of bull markets in the crypto space. So that is a very mechanically supported scenario under a variety of circumstances. Like China's going to do what it's going to do. It's got to pull itself out of a deflationary cascade, and that causes the knock-on effect. Except now we have um, we have interest rates where they are, and that's the kicker. So the what would be the spark? The spark would be Treasury getting bond market volatility under control, and we're not there yet. We are not there. 123 on the move indicator. We are nowhere near them getting it under control. In fact, they just lost control. The fact that it's at 123 indicates the system is trying to pull itself apart. It's not on the path towards periodic or period of stability, a period of relative stability. That would be us starting to see this chart fall through the 200 on the weekly, through 100 into January, February, March, April, May, and you get your lower lows, lower highs, lower lows, which is consistent with what we've seen throughout history, or a relatively short period of history. This chart only goes back to 2003. But when you see things start to stabilize from a collateral perspective, and collateral is what produces cash and dollars, for instance, you start to see this volatility in the collateral pricing stabilize and come down significantly. And that allows the global money printer to go burr, so to speak. So the noise through all the madness is gold pushing 70, 27.23, because everyone's like, are we going to have deflation? Is there going to be a massive bank default? And gold being up here is expressive that everyone either is calling bullshit, that they would let the banks default, and they wouldn't intervene, or they're just going to expand either way the currency supply. Which country will expand it the most is another interesting question. But gold is saying that the currency supply will expand from a global perspective. So it's irrespective of a particular country. It's telling us the general sentiment of the overall system. Oil below 70, quite interesting to see. Let's look at Hang Seng. Oh, China, China, China. Oh, China, below that 200. That is an interesting position to be in. considering Bitcoin just punched 69 and change. Um, let's see what kind of policy comes out of China. By the way, USDC, USDT, $120 billion. Remarkable, the expansion here. One of the largest sterilizers of U.S. of U.S. debt, that is, which is what they're going to need more of in the future. If they're going to enact um, this policy, I have a couple of things on X I'll show you guys. Where is the policy? Here it is. Lynn Alden mentioned this, and Matt Signal, people should be familiar with Matt Siegel. Um, what is this? The Fed Bank of Minneapolis talking about banning Bitcoin, or and why is the most interesting or pertinent consideration. And this has to do with deficit spending. And this has to do with, was it Triffin's dilemma, the pushing out of shit money by good money? Paraphrasing there, of course. But they talk about a legal prohibition against Bitcoin can restore unique implementations of permanent primary deficits. No, because then you still got foreign currencies, and then you still got gold, and then you still got stocks. Yeah, it's not Bitcoin that's just the issue. If they want permanent primary deficits, what do you think is going to happen to stocks? It goes basically Venezuela, straight up vertical. That's the same thing with gold. It goes absolutely vertical until what happened in the early 20th century, where they confiscate gold. Maybe they confiscate stocks this time. Legal prohibition about Bitcoin. That's coming on the heels of that ECB paper. So I find their perspectives um, telling on their, not their sentiment, but their clearly their position, but also what they see is coming. And both of these papers from the ECB as well as the Fed uh, imply Bitcoin price go up. And they're thinking about the implications of the Bitcoin price going up significantly from here. That's what's most fascinating. And Europe is concerned with if Bitcoin's price is going up because it's obviously correlated or inversely correlated to the total currency supply, let's say, and that's going up, then they're worried it's going to impoverish latecomers or non-holders is their terminology. If the price of Bitcoin rises for good, the existence of Bitcoin impoverishes both non-holders and latecomers. Basically, no coiners is the terminology that everyone knows all too well. Oh, it's going to impoverish it. Oh, it's basically they're saying HFSP. Have fun staying poor. No coiners. You should have bought this shit a long time ago. So that is the argument that Europe presents, and the United States comes at it because Bitcoin is in the mix with deficits continuing to do what they're going to do into the 2050. They're worried about the price of it going up and what it does from a money trust or money interest. What money is most interesting perspective. Very, very interesting what's going on. These are all tells. This tells us where things are heading. So I come to these particular pieces of information with Bitcoin not getting rejected from 69. It broke trend. And if you zoom in to the daily, I was hoping for it to give a little bit of an expression of support on the trend line. So that's not a significant line, in my opinion. I don't like trends like that anymore. But clearly, this 10 SMA. So what would I see? Let's look at the last times it interacted with the 10 SMA. And this is on the daily, so we'll get some good candles out of this. It's not like we have to wait a week for a candle. So we're talking about a pierce right through. There's very little support on the 10 SMA. It would just go right through it like a hot knife through butter. So if we start to see a little inkling of support there, that would be something that's not consistent with what we've historically seen. I mean, look at that. That talk about piercing it. And then I mean, it just went right through it nonstop, not even close. That was a bit, oof, just right through it, right through it. Let's see. So we got 8 hours for a daily close. Let's see if there's a bit of an expression of support. That's different. That's indicative of potential continuation to the upside. And frankly, that is quite interesting and certainly constructive to say the least. Um, that gives us a breakdown here. I'm talking with Beebus on Wednesday. Beebus is a old school, well-known developer. I'm quite familiar with his work back in 21 on Fan Network. Look, I'm that 40-year-old guy that doesn't do the meme coin degeneracy, but I certainly do the fintech degeneracy. And Phantom was the destination where people figured it out in a very interesting and somewhat degenerate kind of way. So they did Reaper and auto compounding of very interesting deposits, LPs. Um, they took on very interesting protocols as implementations. So you guys are well aware that I'm very interested in what comes from Phantom, particularly Sonic. Um, but given the history of Beavis and team with Phantom, I'm very curious what happens with Base because Base is even more degenerate than Phantom is right now. In fact, that is the place for degeneracy, other than Sonic. It's like there's very little fintech activity, yet so much transaction volume. Oh my God, you give folks on base a credit facility, a capacity to borrow permissionlessly with relatively modest interest rates, depending on obviously the mechanics of the protocol, which is what catches my fancy about what they are working on. Oh, yeah. They're working on CDX USD. I haven't looked at the contract specifically, but I've seen the white paper. I've read this very nicely. And they take into account um, the history of prominent crypto dollars. And they end interestingly with basically CRV USD. And now we have stable swap implementation and their modifications to the implementation, um, which I found very interesting. Nothing I'm going to point out that's not super technical. Um, but generally speaking, this is, as I said last night, I'll highlight what I said. Where is it? Credit. Okay. You know what we didn't have in 2020 and 2021? A credit bubble. We had USDC and USDT, but that's not an endogenous credit bubble. So when we have $120 billion of frac CRV USD money, MIM, USDF, MakerDAO, are they even on the radar anymore? I don't know. I don't even know what to think about that. All right, fine. They do count as endogenous money collateralized with exogenous. If anything, MakerDAO is literally what Tether is. It's just Tether. Whole separate conversation. But this is what catches my fancy the most going forward in the crypto markets. From what to look at, what I think is the most important, and it's dollars, which I've said a million and one times, but it's dollars that use interest rates to manage currency strength. Um, and it's not even on one hand because technically they all use it. Like even Prisma uses interest rates to manage currency strength, but the problem is it's Dow controlled. Fixed rate? No, 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 no. There's no fixed rate. You cannot have fixed rate. If you want the price of the currency to get stronger, you need to increase interest rates to make it more expensive to borrow so people are incentivized to pay back their debt. And how do you pay back debt? You have to buy the currency. And that's why increasing interest rates increases the price of the currency. And this is how you manage PEG. So you need to ramp interest rates a huge amount potentially from the downside as you need to strengthen the currency because there may be a dramatic need to strengthen the currency if there's significant weakness. So you need to force the collateral, the person's collateralizing their or creating collateralized debt positions, you force them to purchase the currency. And that is exactly what interest rates do. Now, from the top side, you could basically issue currency. If your currency is getting too strong, you could literally issue it and devalue it. And that's what the peg keepers are. So it's by far the most interesting stablecoin design out of everything that's available. Like that's it. Money, CRVUSD, and I am curious about the stablecoin discussed in this paper and what the boys that were so well known on the fandom ecosystem have come up with. And frankly, their work on this product is quite interesting to say the least. So, and clearly they've been working for years at this point, 2022, 23, and now 2024. They were around in 21, getting their feet wet, figuring things out, deploying, seeing what kind of products work in the crypto space. And I'm speaking from a development standpoint. Like, how do you gain traction as a developer? Like, I know what I did over the years, and I found my product niche, and I then I started developing new products with a common theme, and to the point where then I had a brand of sorts. So that's what looks like has occurred. So I'm quite interested in this base deploy, which Beavis mentioned is coming soon. Next week, we're getting started on base with CDX USD and Codex Lend on base. So here's the kicker. The kicker is not it's imperative to understand that even if there isn't something to buy all related, meaning if there's no token here to buy, like that, everyone's like, oh, look at this technology he's talking about. Is there something I could buy and invest in and that's going to go up in value? No, not necessarily. But if these dollars take off, all dollars take off because all dollars are related and it's all about interest rate arbitrage and geographical arbitrage and a cryptocurrency perspective that's literally one market to the other: base, arbitrum, mainnet, optimism, so on and so forth. What are the interest rates? You literally have geographical arbitrage across the crypto space in consideration of interest rate arbitrage, which is quite fascinating to say the least. So any dollar that does well impacts every dollar. And that's just such an important contextual thing to be aware of, or where we are in these markets. It's all just starting. It's $120 billion of USDC and USDT. There's not even close to that amount of dollars of endogenous dollars created within these markets. So, what are these markets going to look like when there's $100 billion of endogenous dollars? And the kicker, here's the kicker. Here's the most important thing, the most interesting thing. Endogenous dollars. Every dollar in existence has an interest rate associated with it continuing to exist. So if there's $100 billion on chain and there's a 1% interest rate on average, all right, do the math. That's a lot of that's $1 billion worth of interest flowing through the system. Um, and that's how this all works. Everything is connected to everything. So you don't necessarily need to own things. For instance, this stable coin over here impacts this stable coin over here impacts CRVUSD, impacts revenue to the ECRV owners. So there's or just yields on DeFi money, for instance, because this is basically staked STCRVUSD. So those yields is 8.92%, which means there's been a bump in currency creation, which is what we see here, basically. Um, that's TVL, but where's total money? Yeah, 1.982 mil and 1019. So 2 days ago, we were at 1.6, about 300 mil, 300,000 and 300 mil. That'd be the day. Be 300,000 the last couple of days. That's nice. That's massive. 300,000 on 1.6, like what, 15%, 12.5%, whatever it is. Double digit percent. You continue to see that kind of growth, and interesting things are going to start happening. So, what causes the interest in this protocol to print more dollars? If Bebis and team gain traction, and there's a lot of debt taken out of base, and the interest rates are relatively high, this is on base also. Some of the collateral moves over here, which drives down the interest rates um, on CDX USD, drives up the interest rates on WBTC on money. And where's the interest rate? You get interest rate arbitrage all over the place. Now, every protocol is moderating and rebalancing, and the collateral is moving. And when collateral is moving, there's transaction fees. And when dollars are moving, there's transaction fees. When anything's moving, there's transaction fees. And I just want a piece of those transaction fees. I don't give a shit what's going on with the damn price of assets. Drive yourself nuts with the price of assets. Just want a little piece of the volume, little piece of the fees, baby. Woo! I hope that helps some clarity. Um, so in that regard, we're all should still be very much looking forward to Tapioca and how they figure this out. I think in 6 months' time we won't be thinking too much about it, and I think anyone who's thinking excessively right now, that's very unfortunate, both for the community and also for the individual. The biggest recommendation I have for capital management is stop thinking so much. Y'all fucking yourselves up in the head. Don't think so much. Think less. Also, take less actions. Also, take more time before you do things. Have more patience. Extend more due diligence. Think things through slowly. Don't jump to conclusions. And don't use emotions. Because clearly everyone wants to get emotional with regard to Tapioca. And I'm like, all right, great. I was one of the earliest investors, and that was six plus figures. But the protocol didn't launch. I understand the mechanics of how a token gets redone. I understand snapshot grade when. All right, fine. Do it before the hack. That makes sense. And anyone who bought after, who gives a shit about them? It doesn't matter. I don't care how much they put in. Just cut them out. You bought opportunistically after a 99% drop in price. Not my problem. Okay, so let's get the protocol online. Let's restore the date of the equity instrument and its corresponding dollars, which create its liquidity profile. Um, and then We're clearly significantly through test nets. We're closer to launch than ever. Okay, that's my 2 cents as one of the original investors. Okay, let's go through some commentary. I think I answered some of the commentary, but we'll go through it one at a time, no less. Raul, hello, good morning. Samit, do deficits matter domestically? Of course, but they don't, but they do. The USD is reserve currency of the world's reserve currency. Well, not treasuries are the reserve asset. And it's not like other countries are hoarding dollars. They use dollars for everything. And that's a very popular metric. The use of the dollar is up all over the world, but it's not like they're collecting dollars. And they've been spending down their treasuries because that's their savings account. And that's why our interest rates are significantly higher than they've been throughout the 2010s. Significantly higher. Clean a shirt, dirty laundry still holds true. Everyone else's debt is shit. Everyone else's currency is shit. In the end, the cleanest shirt in a dirty, shit stained pile of laundry is exactly the best expression of reality. In terms of inflation, wages, housing, consumption in the US, does national debt matter? Well, it matters with regard to servicing the debt. For instance, if the debt servicing, if GDP rolls over and there's less tax receipts, that's going to play a role in the Treasury's capacity to finance stuff that's already passed the House, Social Security and entitlement spending, because you got to pay those bills. And if you don't have enough receipts, that means the Treasury has to issue treasuries to pay those bills. And now you have higher and higher and higher deficits. So it does play a role, or it is significant, because at some point, if you have to start issuing $1 trillion a month, that's just weird. But maybe that doesn't matter. Maybe you're issuing a trillion a month, a trillion a week, trillion a day. What matters? In the end, you have to live through it and to see if it matters. Be quantitative. It's like data-driven development. And two, I guess at some point everyone just calls bullshit, and it's the loss of faith in the system. And that's exactly why I showed you earlier the folks at the central banks looking at the ECB paper we looked at, and Federal Reserve Bank of Indianapolis, was it? Um, and that's Bitcoin going up, up, and up, and up, and up. Printing whatever you print, and if they keep printing deficits like they're printing, Bitcoin goes up, up, and up only. Period. Period. Unless there's a deflationary cascade, which the federal government's losing control of the system. That was the whole point of the Federal Reserve, is to smooth out the business cycle and to prevent deflationary cascades. So yes, they can keep issuing deficits, and it does matter in the sense of trust. Um, there is no fine line, as in there is no, okay, they are at this value. If they hit this value, you get chaos. So that is not the way it works, and that is something that is complicated to wrap your head around, because it's like analog versus digital. At some point, things start to unravel. True. Recollateral. Why does low bond vol allow money for excellent question? Issuance is higher when bond vol is lower. Not issuance of the federal government. The federal government barely has printed the dollars in circulation. So what is the deficit? Whatever the deficit is. The vast majority of all dollars, over 90% of all dollars in existence, has been printed outside of the US using United States, mostly treasuries, as collateral, using CDPs. It's called the euro dollar market, where you buy collateral and you're able to borrow currency against it, except when you deposit that collateral in a bank account. um, how does the bank give you dollars? Well, dollars are a liability. The bank owes you dollars. So those are a deposit. And this is double entry accounting. The asset side has the collateral, the liability side is the dollars. It owes the dollars. The bank never has to give you dollar bills, because if you have a bank deposit account in Britain, $1 million because you posted $2 million worth of 10-year paper. If you want to make a wire transfer, whatever the hell the European equivalent is of $500,000, do you think you're transferring dollars? No, you're transferring the liabilities on the bank's balance sheet. So the bank literally created those dollar liabilities as a deposit, as a loan associated with the collateral deposit, the addition of assets to the bank's balance sheet, double entry accounting. So that is how the world prints dollars. Um, and that is why every dollar in existence has an interest rate associated with it. Except there's some dollars in existence that don't have an interest rate associated with it. And that's $5.67 trillion of M0 base money. There's no interest associated with that. But how many dollars are in existence? Mike Howe has thrown around the number $270 trillion. We're running around at an M2 of $21 trillion. So the difference between 21 and 5.67 is an interest rate associated with those dollars at some place in the chain of deposits. And then that's not even offshore. That's just the United States. What about the whole world that takes US treasuries at 10 to 1 and prints dollars with them? So they're leveraging their ownership of treasuries to leverage the interest. So instead of 4%, you get in 40% on whatever's running around at 4% right now. 10 years are at yeah, 4.17%. So you take 10 to 1 leverage on 10-year treasuries and get 40% interest. And what happens with all those dollars that end up being leveraged? They end up filtering through the system. They end up as collateral and liabilities, and just interweaved into the tapestry of the double entry accounting system of the world. That's how it works. And we get a sense of how that works with our CDPs, with our CRVUSD, our DeFi money now, what Beavis and team are working on, and we'll see really soon. And everything, including Frax and old school DAI and USDS and Magic Internet Money. And I have my list of dollars here. Uh, even KeyDAO and Dyad's got some new stuff, relatively new. Inverse finance. This is relatively short list, right? It's really relatively short list of folks that have worked on dollars. This is all the dollars. I can't think of other dollars. What else is there? Not that. We close that. That's Curve. So if we go to Curve USD, 1, 2, 3, 4, 5, 6, 7, 8, 9. Believe we could get rid of, well, Spark. Spark is where you get your credit. So I believe that's 9. Okay. That's about 9 credit providers, CDP style credit providers with varying interest rate policies. Oh, and there's Liquidity. All right, I don't have that here, but Liquidity's there as well. So Liquidity V2, and they're bold product. So all that is about 10. Very interesting, huh? Okay. I digress with the thing that interests me most in these crypto markets. Sir Joe, President, accounted for. No horns, no tail, oats and grains. Okay, I'll buy that. Ron Skopinski, hi Cap. What do you think about the recent tapioca meltdown? I think I addressed that a little bit earlier. I'm not thinking about it too much. I'm currently in the Discord and I'm like, just do this, this, and this, and we'll get live in a month or two. All right, cool. Well, I look forward to it going live. Reissue the tokens, figure out the liquidity. Whoever bought after, who cares? That's it. Move on. And I look forward to seeing the protocol live because that'll be number 11 from a dollar liability standpoint. Brian Morrison, happy Monday. Much a pleasure. Much a pleasure. Anything else to look at today? Oh, there's the test net. Oh, nope. That's the count. That is this lovely paper that Beavis and team wrote. Well, Beavis will be on Wednesday, so we'll get to talk about this stuff. That's about it. We'll wrap it up for today, ladies and gentlemen. Monday, October 21st at 12 p.m. Nice timing today. Decent length of stream as well. 178 people made it to the end of the stream. I appreciate each and every one of you because together we are just a little bit more rational than when we started the stream about 45 minutes ago. I wish you all a good one, and I will see you later this week on a